Financial brokers are preparing for unforeseen adjustments in margin requirements due to the recent Israel war, anticipating heightened market volatility. Margin rules have been temporarily set to 100% of the exchange maintenance margin requirement. This means that hedge funds can now borrow up to $300,000 while having only $30,000 as collateral, illustrating a 10 to 1 ratio. Previously, with a 100% margin requirement, they needed $300,000 in collateral to borrow $300,000. In the existing situation, they must secure $300,000 as collateral to borrow the same amount. For instance, in the past, they could borrow $300,000 with only $30,000 as collateral, but now they need the full $300,000 as collateral. In this example, they would have to come up with an additional $270,000 as collateral or face a margin call. Each scenario varies in ratios and conditions. This illustration aims to shed light on the mechanics of margin requirements. For stock says, our maintenance margin stands at $11,200 USD, with an intraday margin typically at $400 USD. AMP advises having $11,200 in free cash in your account to purchase a singles as contract at the current market price. By purchasing ones as contract, you expose yourself to approximately $250,000. Although the intraday margin has reverted to $400, it's evident that every situation presents unique conditions, emphasizing the tightness of margin requirements. The margin requirements are tightening, possibly triggering widespread margin calls, especially given the current state of the overall market. We'll delve deeper into this shortly. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's switch gears and focus on recent developments with AMC. Remarkably, Taylor Swift's influence has propelled AMC to achieve its highest single-day ticket revenue in its extensive 103-year history. The Eras Tour, on the whole, is projected to generate an impressive $2.2 billion in North American ticket sales and stimulate around $5 billion in consumer spending within the United States alone. Through this partnership, AMC stands to earn approximately $1 billion, considering the film's successful debut, showcasing promising profit prospects for AMC. This potential windfall of $1 billion is directly attributed to Taylor Swift's Eras Tour. Moreover, this opens up the possibility of future tours collaborating with AMC, potentially yielding a consistent and solid income stream. Let's briefly discuss the numbers. There's an 11.62% short interest utilization, with 64% usage, and the current cost to borrow for AMC is undisclosed. Additionally, there are 41.7 million shares available to borrow, according to Stock Tracker. Remarkably, we're still dominating the option chain, with 24,000 calls compared to 4,000 puts expiring in the money, and more being placed out of the money. The options chain continues to look bullish, setting a positive tone for the weeks ahead. However, it's essential to remain vigilant, as market makers are accumulating short exempts to suppress the price action. As of now, AMC is trading at $9.25, maintaining a relatively stable position for the day. This week, I anticipate AMC rising to about $10.75 at some point, potentially maintaining that level for resistance or stability over the next few days. At present, holding above $9 is a positive sign, coupled with an upsurge in buying volume, indicating that buyers are exerting control, at least at this price point. In other news, Charles Gasparino's wife's streaming company, Cable Court, has officially ceased operations. It's ironic that Gasparino has been critical of AMC while his wife's streaming business, a competitor to movie theaters, faced closure. AMC, on the other hand, is thriving. It's interesting to consider his perspective on this development. Shifting gears to GameStop, it's currently trading at $14.99, down by 0.6% for the day, exhibiting a choppy trading pattern. This indicates a potential spring effect. To regain momentum, we need to witness a breakout above $15.60, followed by surpassing $16.30. Conversely, the bearish scenario may see a dip to around $13.35. Notably, there are 500,000 shares available to borrow for GameStop, and the borrowing fee is relatively low. Unfortunately, we're facing challenges in the option chain, as short exempts are piling up, indicating a bearish outlook. Despite algorithm-driven attempts to keep it at the green, the overall outlook remains bearish. Comparisons are being drawn between the current economic conditions and past recessionary periods. Significantly, banks are now significantly tightening their lending standards, nearly reaching levels observed during the 2008 financial crisis. However, despite this, the Federal Reserve and major banks are assuring that we're on track for a soft landing. Curiously, when a soft landing is widely predicted, it often signifies troubling times. The tightening lending standards are also a response to the regional bank crisis, with banks preparing for a potential recession, even as the Fed remains optimistic about a gentle economic landing. As highlighted earlier, the video showcased tightening margin requirements and lending standards, suggesting that the bank crisis remains an ongoing concern. It's crucial to stay informed about these developments. Shifting our focus to the banking sector, a significant amount, approximately $260 billion in deposits, has exited major banks just this year. This trend is noteworthy and bears watching. Before delving into the discussion on war and related stocks, as well as an analysis of the S&P 500 to conclude this video, I encourage you to join our Discord community. I'm actively engaged there daily, responding to your queries and facilitating discussions. Our Discord community comprises approximately 500 amazing members, sharing gains, losses, discussing stocks, and receiving options trading alerts. Additionally, I promptly post my trades, offering insights into my strategies. I'm looking forward to interacting with you all and fostering a supportive and engaging community. By now, many of you are aware of the ongoing war situation. In case you aren't, I shared a brief update yesterday. Israel finds itself in a state of war following an unexpected Hamas attack. The U.S. military has swiftly intervened, dispatching Navy ships in proximity to Israel in response to these attacks. Furthermore, F-35 fighter jets are being deployed to the Middle East. The Pentagon is set to announce a military aid package for Israel soon. It's worth noting the timing of a $75 million aid package to Palestine sent by Joe Biden just before the attacks on Israel. These geopolitical events raise critical questions and concerns. Moreover, Russia's involvement has been signaled, with reports of a Russian hacker group targeting the Israeli government website. This intrusion could potentially escalate tensions involving Russia in the conflict. A worrying prospect is that these events may lead to war crimes, especially if Israel takes a harsh stance on Gaza, vowing to leave a lasting impact for the next 50 years. Such developments are concerning, and many fear this could escalate into a global conflict, potentially marking the beginning of World War III. Various nations are aligning themselves, amplifying the fear. Iran has issued a concerning warning, stating that any attack on them will prompt attacks on Israel from multiple fronts. The implications are unsettling, underscoring the potential gravity of the situation. While these events are distressing, it's essential to acknowledge that investments in certain sectors, such as defense stocks, may see a rise. Companies like Boeing, Lockheed Martin, and Northrop Grumman, which play a pivotal role as major suppliers to the U.S. military and other global forces, could experience increased demand for their products. These include helicopters, fighter jets, transport aircraft, missile defense systems, and more. Ticker symbols like RTX for Raytheon Technologies, showcasing missile defense systems and cruise missiles, might present investment opportunities. However, it's important to exercise caution and conduct thorough research before making any financial decisions. In conclusion, the video wraps up with a sobering look at the U.S. national debt, which has now surpassed a staggering $33.5 trillion for the first time in history. The clock is ticking, with billions being added to this mounting debt every few hours. Shifting our gaze to the broader market, the S&P 500 is currently trading at 42.91 ohm, experiencing a slight dip of 0.1% for the day. This is somewhat surprising, considering the favorable news from last Friday, where a significant green candle was observed, accompanied by a substantial increase in trading volume. The index touched the supply zone around 43.10 to 43.15, hinting at a potential accumulation phase to retest and surpass this level. Historically, September and October sell-offs tend to be short-lived. If the S&P 500 does witness a decline, potential support levels lie between 40.90 and 41.30. On the contrary, a breakthrough beyond 43.15 could pave the way towards 43.60. However, these predictions remain subject to market dynamics and are not a substitute for professional financial advice. Always conduct your own research and make informed decisions. Thank you for tuning in and stay informed for more updates. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.